Anant Tandon is now joining us as well to talk about the markets. Anand, you have a very close eye on global developments as well. In the last 48 hours, the way US retail sales data on a stronger side, the CPI data came in higher. The narrative from delayed hikes is now going toward delayed cuts is now going toward perhaps a hike back on the table, and that is leading to dollar index rallying, yields rallying. Is that a legitimate concern, or these data points should be taken with a pinch of salt in your view?
So I think the US Fed is in between a rock and a hard place, right? I mean, typically, irrespective of what they say, 3 months before the elections, they have to start cutting interest rates. So, while they will keep on talking about being data driven and so on, the reality is that, the president has already voiced an opinion saying that he would expect that the June meeting would actually announce a rate cut. So now it's going to be a little hard for them to actually go ahead and do something else. There is almost no chance of them increasing interest rates. They will find some reason why not to. And also, there's not that much of a case to be made. You can always find some data which justifies that. The question about a rate cut is already a little difficult to justify, but I think it will still come through. Despite that, I think you are at a stage where the market is showing signs of nervousness, and most of the trades that were kind of geopolitically linked as well as linked to a potential cut are playing through because you are still, despite a small fall in gold and some of the oil prices and so on. I think that the longer term or even the medium term uptrend continues. So I think you are still looking at a situation where the US will be looking to cut. Don't forget the fact that from next year onwards, their debt interest payments on their debt will now reach $1.5 trillion, which on a economy which generates about 4.5 trillion, kind of revenues, you are going to go from something like 400 billion a year ago to 1.5 trillion a year later. That's a huge cut, and a huge ask, and there is no way of taking that away unless you actually start managing the interest rates. So I think from a both political as well as an economic point of view, you will get suppression of interest rates in the US.
Okay, suppression of interest rates is what is likely to happen. But in the meantime, it is all about that visit that Elon Musk is making to India, and that's had the street excited with respect to what's happening to the auto sector, plus what else could be on the agenda, right from the Starlink, product of his to the fact that there could be certain backward integrations as well that might happen. This is the question we've been posing to a whole host of industry, veterans and corporates as well. Listen into what UNO Minda had to tell us, because they were quite hopeful that they would participate in that entire EV ecosystem, and they're speaking with a whole host of EV companies, including Tesla.
We are definitely working with the majority players. I would say the top tier one players. We first, to just put a context, today there are more than 250 registered EV two-wheelers in the country. So definitely we can't work with all of them. So what, as a strategy, we have been doing is we have definitely been working on the existing players who are in IC also and EV also. So that's almost like top 7-8 players we are already working. On top of it, the new age EV players who are specifically only in EV and not in IC, we have sort of shortlisted top 7-8 of them whom we are working. So from that perspective, we are largely maybe working with 95% kind of volume which is currently being generated. So as a strategy, definitely we don't want to work with all of them, because then you have limited bandwidth and every customer needs the same kind of servicing, and we don't want to falter on that. So yes, we might be a little conservative in terms of number of players who are currently into the EV business, who are the new entrants. So definitely we are engaging with only with Tesla. Definitely Tesla, be it JSW, be it whosoever are the new players, we are definitely engaging with them and waiting for the right opportunities.
Okay, and here's some buzz that we are picking up, and we told you earlier that we're picking up from our market sources that a potential institutional investor for Vodafone Idea's 18,000 crore rupee FPO could very well include Rajiv Jain run GQG Partners as well, and some key global and local asset managers too. Anurag Joshi, my colleague, is here with more details.
So Vodafone Idea's 18,000 crore rupee follow-on public offering, which is the biggest such equity sale in the country, opens for anchor investors today, and a slew of investors are lining up to invest in the offering. And our sources have told ET Now that some of these investors include Fidelity, GQG Partners, which is run by Rajiv Jain, Aditya Birla Sun Life Mutual Fund, HDFC Mutual Fund, and these are seen as possible investors in the issue. And ET Now had reported earlier that Vodafone Idea had already secured the commitments from the institutional investors for the upcoming sale, and this issue is open for the public from April 18 to 22. Now, yesterday the management had told the media that about 5,700 crore rupees of the issue will be used for the 5G rollout, and following the issue there will be some change in the shareholdings of the key shareholders, which is the government, the Aditya Birla promoters, they have equity, and the Vodafone PLC. The government's holding is going to come down from about 33% in the company to about 24%. Aditya Birla promoters who are holding about 18%, their shareholding will come down a tad, but they will continue to hold above the key level of 15%, and Vodafone PLC's holding also reduce because of this.
So that's one stock to watch out for. Anand, in this kind of a market, where do you find most comfort in buying, or are you kind of, after the massive rally last year, more on the sidelines right now?
Yeah, I don't think that there is any great need to be rushing in to buy right now. Clearly, the market, which was in a momentum upwards, has also kind of paused. And anyway, the market is looking stretched from a valuation point of view, as well as from the kind of rally that we have seen, which has been almost one way. So there is no particular reason to be rushing in. That said, if you are looking to, from a macro level, if you are looking to see where you might still be able to sustain an uptrend, as I said earlier, you might want to look at contra US dollar trades, and therefore I would still be bullish on energy and metals, including metals like which have already seen a big upswing, like copper, etc. I think some of the precious metals also are not looking too bad. Silver has underperformed dramatically. You could see a catch up there. You have some of the industrials which are used, for example, in EVs, etc., like palladium, have done very badly and therefore are due for a rise. So I think it's more tactical kind of plays that you are looking for. I don't think there is any great value in any of the sectors of the market. If you really must push it, it will come back to really the private sector banks and so on.
Right. Okay. We've been flagging off the event of the day, which is the launch of Aditya Birla Capital digital fintech app, where Kumar Mangalam Birla, of course, spoke and said that, the AB Group is eyeing to have 30 million customer base for AB Financials in the next 3 years. Hear out what he had to say, and we also had a chance to speak with AB Capital Chief Vishakha Mulya as well to understand their future business targets.
As we advance into 2024, the launch of 2 new consumer-facing ventures marks the group's commitment to constructing a growth platform characterized by a unique confluence of strength and breadth. Just last month, we launched our paints business with an initial investment of rupees 10,000 crores, as you know, and in a few months, we will be launching a jewelry retail venture with an initial investment of rupees 5,000 crores. The ABCD D2C platform will further help ABC augment its digital footprint. It will acquire customers digitally and, more importantly, at scale, cross-sell and upsell in a frictionless manner, and become a full-stack financial services provider. And the plan is to acquire 30 million new customers in the next 3 years.
We have existing around 35 million customers. So the idea is to double the customer base in the next 3 years. At the moment, the app is for mainly acquiring the new customers to ABC. We will work with the partners where we don't have our own manufactured products, but idea would be to deliver all the manufactured products to our customer.
Okay, so clearly putting the entire focus on their finance vertical of the AB group, so that's something to watch out for. But separately, in terms of the other details, Amara Raja Batteries is actually gaining more ground as we speak. So that stock too is now high by 12%. So clearly a bit of a catch-up happening versus Exide, which is actually cooled off a bit. Aegis Logistics, Titagar Wagon, Sterlite Tech, these are some of the other big gainers that we're watching out for in the trading session. Just quickly wanted to highlight Infosys and Wipro because what the expectations are for Thursday. For Infosys, we are expecting it's going to be a weak set, a constant currency decline of around 0.4%. The dollar revenue is also expected to decline 0.5% because it's a seasonally weak quarter for Infosys. There won't be a pass-through revenue. The third-party revenue is also a bit limited, and the commentary that we've got from TCS suggests that the discretionary demand is not back yet. And if TCS has actually managed to disappoint on the top-line growth, little other chances that actually Infosys will surprise us. On the margin, however, it will hold up at 20.7% because there won't be those one-time costs that we saw last quarter, and the deal win should also be okay. Of course, the most important thing is the FY25 guidance. Consensus seems to be building between 2 to 6%, largely around 2 to 5% mark. So that's what the company might deliver. Shifting focus to Wipro as well, because again, those numbers are expected on Thursday. Again, a weak set, maybe a constant currency decline of 0.2%. IT service revenue is also expected to be flattish, with a bit of a disappointment coming in on the rupee revenue as well as profitability. It's the BFSI vertical that continues to be a challenge, but for Wipro, the most important thing will not only be the Q1 FY25 guidance, wherein we are watching out for -1 to +1 kind of figure, but of course the new CEO, which came as a bit of a shock to street, that there was this sudden announcement of Thierry Delaporte actually stepping down and a new CEO coming. If and what kind of strategy does it entail is something that the street will watch out for. But for now, both of those stocks in the red. Anand, this is a question we've been posing our other experts as well. How should one approach IT right now? If you hear the TCS commentary, it seems like generative AI is going to be an opportunity for India rather than a disruption and a threat. But what's your view?
Well, the reverse of threat is an opportunity. Obviously, there is some money that can be made by doing things which are new. And so far, the Indian IT sector has always managed to deal with whatever technology innovations have come through. But the reality is that the generative AI is actually equal to what a commentator in the US once mentioned recently, that it is like finding a planet with 100 billion people willing to work for you for free. So that's the reality of what generative AI can do. As it improves, you will find that the number of headcount required to get things done for many of the cases, including writing code, is going to drop off very sharply. Now, clearly, there will be a new business of prompt engineers which will come up, and which we have already begun to see happen. But the number of prompt engineers required is way lower than the kind of manpower deployment that we need at the current status. So I think that's a very big threat that the IT companies have to figure going forward. Near term, obviously, till that kind of expertise is reached, you will be using more people to do stuff because business in general is going to move towards generative AI and the use of it for many of the common works that you're beginning to see. Already, you can estimate that the number of, for example, bots that have replaced agents in terms of being able to answer client queries is tremendous. So at various stages, you will have a shrinkage of the kind of work. And that means that the trend that you are seeing of having lower budgets may actually continue for longer, including the fact that you are actually seeing most of the business that, for example, TCS has got have been cost takeout deals. So people in the US are looking to prepare for having fewer manpower employed and moving it out, whereas we are exulting in the fact that we are absorbing that additional flow. So for some more time, at least that flow will come through. But I don't think that you are looking at anything other than maximum of early teens kind of bottom line, which is more than paid for when you are looking at companies which are trading at 25, 26 times. Don't forget that an Amazon itself, a Google itself trades at around 21, 22 times next year, depending on whose estimates you're looking at.
Right. Anand, what are your thoughts on the real estate space? We've seen a massive amount of wealth creation in, not only the macro techs of the world, but even coming down the market cap, Ajmera, Prestige, you name it. we were just, Aisha and I were just talking about how not only the metros like Mumbai, NCR, but even the tier 2, tier 3 areas in the south beyond Bangalore, you're based out of Hyderabad, that place has seen massive rally in terms of pricing. What phase of the real estate cycle are we in? Are we in the middle stage, still early, or it's kind of already petering out?
I think you could argue that it is different cycles for different cities because each city is actually a micro market. But that said, see, we have to go back to understanding that at the end of the day, a house is something that most people want to own and remains one of the largest investors for most people. So there are investments made in their lifetime for most people. So therefore, till you have a situation where there is a kind of people still need to buy houses to stay in, and not everybody is out of being on rent, you will have a constant demand. Now the problem with demand, it has two sides of it. One is the desire and the other is the pricing power. And I think the challenge is that the pricing power is where you will face a problem. Most of the sales that you have seen right now have been at the higher end, and even though we have seen a large number of around 1 crore houses being sold now, because obviously income levels have been rising, but at the lower end, I think you will find that there is a great challenge in terms of sales. So if you were to look at the markets, for example, in Hyderabad, my belief is that the best is behind us. It's not as if the volumes will start from here, but the cost of setting up, of buying new land to be able to build, and the kind of pricing that you're going to see for you to be able to construct it, given and versus the amount of money that you can actually assume that a consumer will give you 3 years from now when your building is ready, is not very commensurate right now, besides the fact that there is a huge amount of inventory that's going to be unloaded in the market in the next 1 or 2 years. So I think in terms of volume growth, you will continue to see growth. Many of the construction companies will continue to show good numbers for the next 2 years. But it is like most other things, the highest margin business is out of your hands now. Your inventory is going to come in at a higher price. And therefore, again, you have to be looking at those brands which can sustain in poor markets if you really want to invest today. Otherwise, this is a good time to start lightening up on the not so great brands with not great balance sheets, who will find it difficult to build the inventory going forward.
Right. So that is about real estate. But closing ideas, Kunal, anything coming up on your screen? Because tomorrow is a market off, right? So I think a lot of people would be hesitating in taking positions, right?
No, as I said, I think there are a few mid-cap and small cap names which are still heading towards breakout. There are two names which I would highlight in that category. First is Poonawalla Fincorp. That's something which has come back into a breakout mode. I think from 470, 475 to now back again about that 480 plus levels where it's trading right now. It looks very attractive at current juncture, and expecting the stock to head towards a breakout of the previous highs. 520 could be kept as an immediate target. Stop us at 475. And the second is about Ingersoll. That's a stock which is heading towards a 3 or a 4 month consolidation breakout. It's almost like a 350 point of breakout consolidation for the stock. So expecting a 350 point up move for the stock going forward. 4040 as a target, stop loss at 3720.
Okay, point taken. Anand, what's the view on power? We discussed real estate and the kind of upcycle we have seen, and you believe that perhaps the best is over in that. But what about power? Because, I mean, if you look at it on the ground, the demand-supply mismatch is quite huge. But then there are capacities also which are expected to come up.
Well, I think power demand is rising, and obviously what was underutilized a few months ago even has now got fully utilized, and then some. And I think you would expect to see power growth continuing to happen. I mean, if power demand is growing in double digits in a place like the US, where you don't expect to see that kind of growth because of, for example, generative AI requiring huge amounts of processing capacity being put up, which requires new data centers and so on, you can imagine in a country like India, which has all of the pent-up demand plus the growth that is going to come through, hopefully, uh, which needs to be fed with energy. So I think whatever we are looking at in terms of the growth numbers is not going to be adequate. That said, whether you should be putting in huge amounts of money into it is a different issue. Many of the companies which are in the power generation business, for example, have already run up quite a bit, and now, for example, an NTPC is no longer as attractively priced, let's say, compared to where it was a year ago, because now whatever you are seeing has been more or less paid for in the price. The same thing goes for most of the private sector players. The grid was a little more interesting for a while, but again, these are all, they will all grow at a level which you can kind of predict very clearly because of the fact that, they are all regulated entities, and therefore the kind of growth capex that, for example, Power Grid is putting up is more or less reflected in the price that you're seeing. So from a underlying demand and growth point of view, I think it's a sector which will continue to do well. From a investments point of view, I think you should wait for a better entry point.
That's the take coming on power. In fact, we had a whole host of experts as well speak with us about, the power demand and whether or not summer season uptick in demand is going to be met. What are going to be the challenges and what's the offtake really for the power industry?
There is a good news. The monsoon rainfall during June to September this year for the country as a whole is expected to be 106% of the long period average. Or otherwise you can say that rainfall is expected to be above normal this year. Considering the distribution in the country, we are expecting uniform distribution in most parts of South India, Western India, Northwest India, Central India with above normal probability.
In terms of the storage is an integral component of the whole equation. If we have to replace the fossil fuel capacity, because if you need 24/7 through renewables, then storage becomes a key component of the whole equation. So we have actually plans to tender out a lot of storage. So we are looking at storage also very aggressively, and we are technology agnostic on that.
And this year it is expected that around the power demand touches 260 gigawatt figure this summer. So to meet the requirement, from energy side, against the production of 10 million metric ton from our Talavera mine, compared to the last financial year, in this financial year, the coal stocks at the power stations as well as at the mine pitheads are at peak. So I don't think that situation arises this financial year. It is better situation than the last financial year.
Okay, so that was about the power demand and the surge that we're expecting later in the year. But on that note, Anand, we'll let you go. Thanks so much for making time and speaking with us. Time to take the BTSC trades from our chartist. Kunal, what's your BTSC trade?
So the two buy calls which I've given, first is one Poonawalla FinCorp. That's something which looks attractive for a target of 520, stop loss at 475. And Ingersoll Rand is something which is also coming back into after 3 month or 4 month of consolidation. So would suggest a buy with a target of 4040 at stop loss at 3720.
Right, okay, let me hand it over to Vinny now and find out how the day has shaped up. Vinny?
So looking at the day today, yes, we recovered from the day's lowest point at the end of the day, managing to close on with cuts of only 0.5% in trade. Nifty holding on to 22,150 levels at the end of the day. Sensex also seeing a decline of around 0.5 to 0.6% in trade. What managed to hold on to some bit of a gain today when you're looking at it is, let's pull up Nifty Auto. That's among the top sectoral gainers. Other than that, we have the Nifty Pharma that managed to hold on to some bit of a gain there. So yes, keeping an eye out on Nifty Auto, Nifty Pharma, FMCG pack. Let's see what that did, because that also saw a bit of a gain, and that's what we're keeping an eye out on. And other than that, the Nifty Media managed to see very strong gains of 1.6%, managing to close the day on the positive side. In terms of an up move, today we did have all the oil and gas names that in the Nifty were seeing a buzz as well, and other than that also they were seeing a buzz. So ONGC surely seeing a very strong uptick of almost 1.2%. Other than that, we did have GAIL, which was in focus as well, HPCL, Oil India, all of them managing to at least hold on to that green side. Let's pull up Senco, because that's among the third consecutive day of gains that we saw for Senco Gold, and this was after its strong Q4 update. We did have a brokerage note that came in from MK as well, and that's keeping the stock a buzz. Other than that, we did have focus on Newgrow Capital among the mid and small cap names that saw a good up move during the day because of the Q4 updates of the company. Other than that, let's pull up the charts in terms of the Nifty 50. What we're seeing at the end of the day, Eicher Motors, Unilever and Titan among the top Nifty 50 gainers. While in terms of the losers, we did have today Infosys, which is seeing clear pressure coming in for the numbers coming out on the 18th of April that we're keeping an eye out on. LTI, Mindtree, IndusInd Bank, among other names that have seen a fall coming in today's trade. Let's see what the mid-cap movers today are. And in terms of the mid-cap names that we are seeing good moves in, CG Power, BDL, Z, that managing to hold on to gains, as well as Laurus Labs, that's holding on to gains. While Infosys, Gujarat Gas, obviously we're keeping an eye out on that. Coforge, Macrotech Developers, that's seeing a sharp fall as well. And LTTS and Nykaa among the top losers in the Nifty mid-cap. But yes, that's how we're seeing in terms of an move that has come in for the market today. Advance decline ratio is clearly in the favor of advances today versus decline, though the market is not seeing much of an excitement on that front. But yes, so overall PSU banks, Nifty IT, clear pressure coming in on that front. Infosys, TCS, pressure there. Reliance managed to see a bit of a recovery from the day's lowest point, and that came in as a support for the markets. But yes, that's how the day is closing at. Nifty 22,170 levels at the end of the day is what it's closing on, recovered from the day's lowest point.
If you like this video, then like, share and subscribe to ET Now.